Hello, I'm Bernard Hickey from Eurostoxx and welcome to 90 at 9. This is your morning briefing. We get everything you need to know in 90 seconds at 9 o'clock, starting now with news aplenty over the weekend on global financial markets. The European Central Bank on Thursday and then European leaders on Friday reassured markets they would do, quote, whatever it takes to save the euro. There was a meeting of Angela Merkel, Mario Monti and François Hollande, the leaders of Germany, France and Italy over the weekend, where they repeated the pledge from the European Central Bank governor to do whatever it takes to save the euro. However, the German Bundesbank, which fancies itself to be independent, is against using the European Central Bank to essentially print money to buy Spanish and Italian bonds, which is the expectation of the markets. However, markets rallied late on Friday night. The S&P 500 up 1.9%, European stocks up 2.3%. Risk was definitely on. So commodity prices rose, the gold price rose to $1,633 an ounce, and even the euro strengthened. That's partly because the Spanish bond yield, which remember had been over that key 7% mark, fell to 6.74% on hopes the European Central Bank would go out and buy Spanish and Italian bonds. Also, there's talk of a third round of quantitative easing by the US to be announced as early as this week. The US Federal Reserve has its meeting on Thursday, our time. And this followed news that US GDP growth slowed in the second quarter to about 1.5% annualized, from 2% in the first quarter. There simply isn't enough growth in the US economy to reduce its unemployment rate, which is stubbornly over 8%. And finally, BHP, the mining giant in Australia, is likely to announce a delay of 2 years in its Olympic Dam expansion. This is a big copper gold mine. $33 billion they plan to spend on this expansion. They're going to delay it for 2 years because of concerns about commodity prices and the slowdown in China. I'm Bernard Hickey. That was 90 at 9 from Eurostoxx.